I'm Mark Gagan and you're listening to the Voice of Insurance podcast, produced in association with Advantage Go, enabling an enterprise view of exposure. The growth in hybrid fronting carriers has been explosive in the past 7 years, and this growth has both been fueled by and helped feed a parallel explosion in the formation of MGAs and the rise in commercial insurance distribution outside the admitted blinds market. Today's guest is one of the first movers in this relatively novel insurance carrier type and co-founded the business that is now MS Transverse. As such, Dave Paulsson is a guest with a unique perspective. Now that the sector is beginning to mature and MS Transverse itself is part of a top 10 global insurance group, this podcast examines what is going to come next in this remarkable growth and transformation story. Unlike most of us, who just one day found ourselves doing insurance in one way or another, Dave came to the sector by looking at it from the outside, spotting a golden opportunity and executing a plan to make the most of that opportunity. That's what makes him such a refreshing insurance entrepreneur, and this podcast a little out of the ordinary. Dave is very smart and is laser focused on the job in hand, so if you want a clear idea of where the multi-billion-dollar hybrid carrier boom is heading, then listen on. One of the industry's best qualified executives is on hand to guide the way. Enjoy the podcast.
Dave, welcome to the Voice of Insurance.
Great to be here.
For anybody that's listening who doesn't know you, Dave, why don't you introduce yourself and run us through your insurance career to date?
Absolutely. Well, thank you, Mark. It is a pleasure. And my background, I think, like a lot of the industry, was certainly not a straight line to the insurance industry. I graduated from NYU and went into finance, really the buy side of the industry, hedge funds, private equity, venture capital, things like that. And really for about 15 years or so, was a generalist investor. I was investing in everything from oil fields and wind farms to movies and real estate, hedge funds and banks and all kinds of things. And at some point within that, I started to invest in the insurance industry. First with what used to be called SAC Re and now called Hamilton Re, and later with groups such as Securus in the ILS space. And around 2015 or so, I'd sort of been searching for an area to start to focus as more of a specialist, to have a real level of depth and relationships that I could then bring in my capital relationships to and work on deals together. The larger asset management world is always looking for great investment opportunities, really across geographies and across industries. But practitioners in those industries, for various reasons, might not understand what it takes to make a great investment. And so my hope was that I could take my 15 years or so of investment background and bring it to a specific sector. I chose insurance as the focus because relative to energy or transportation or banking or media, it's such a massive industry, $5 trillion a year in P&C premium spend globally last year. Such a massive industry. It's so ubiquitous in our everyday life. It's so integral to economic development and to society. And yet it's basically under the radar of those outside of the industry for a whole bunch of reasons. And so that addressable market relative to the low visibility, the limited number of investors and innovators, it seemed like the most attractive area to focus on to really build a core competency. And so in 2015, I left my job as the head of investing for a family office to really focus on insurance. I was very fortunate to meet Eric Mattson, who became my business partner, formerly of AIG and Munich Re and places like that. And we started to focus on the P&C insurance space. And so we would go out and look at what others had been doing. And then we'd bring around us, we'd sort of hold these ideation sessions of senior executives from major firms. And we talk about the latest deals that big private equity was doing, that other carriers and other reinsurers were doing. And why do you like this transaction? Why don't you like this transaction? What are the key themes? And then we sort of iterate on that until we would come up with a really compelling investment idea. And then I'd go to the big marquee private equity houses, and ultimately we worked together on an investment in the insurance space. And so I did that for about 3 years. fairly successfully. And then I was ready to focus, along with Eric, on something that we could really call our own. And we'd been, for some time, looking at this MGA space. It's not that long ago because we started Transverse in 2018, but even 8 years ago, MGAs were still a relatively small part of the insurance landscape, both here in the US and certainly globally. But you could see that the market was turning, that the profile of the MGAs, the reputation of the MGA structure was taking on a level of acceptance and legitimacy by practitioners, underwriters, by investors, by reinsurers, by market participants. And as that sort of acceptance really took hold, you could see momentum building for talent and for capital and for just growth of that space. And I had plenty of friends in PE land and money land investing in and rolling up MGAs, didn't want to compete with that. But instead, we started from sort of a first principles approach to what would the ideal carrier partner need to look like to this space. Blank sheet of paper, no preconceptions, no legacy to deal with, just absolute white space. What should it look like? What should the ideal carrier partner look like? Every MGA needs a primary carrier in America in order to prosecute their business. We came up with the term hybrid fronting, but we didn't start out to make a fronting carrier or a hybrid fronting carrier. We, to this day, even 8 years later, are still obsessed with being the ideal preferred carrier partner, primary carrier partner to the MGA space in every permutation of that. You can call it MGU, you can call it delegated authority, you can call it program administrator, but where you are delegating that authority, where you're giving the underwriting pen, where the rate and quote and bind is being done by a third party, we think that that is fundamentally a different muscle movement than the specific or traditional way that a normal full stack carrier might go about it. So that's really where we started. We started with a blank sheet of paper, $100 million in a strip mall in Princeton, New Jersey, as we like to say, above a teriyaki boy restaurant. So we lived the hero's journey, that entrepreneurial journey from nothing to today, post-acquisition, et cetera. We'll be close to $3 billion in premium, 20 plus of the absolute top tier MGA practitioner relationships, the largest and deepest and most high quality of reinsurance support, an A+ rating, the support of one of the 10 largest P&C carriers in the world. But it was an amazing journey. It was certainly not a straight line. We've learned so many lessons through it, but I'm ultimately extremely glad to have chosen insurance as that area of focus. It's been very rewarding to me, to our original investors, but also, quite frankly, to our current parent, Mitsui Sumitomo, as well. I think it's been an amazing outcome for everyone, not least of which, of course, are MGA and reinsurance counterparts.
That's amazing. I mean, my natural state would be to interrupt my interviewees and say, wow, this and that, and jump into different bits. But I think you absolutely really nailed it. You didn't leave any opportunity for me to jump in and ask you to clarify anything. That was really, really interesting. It was interesting about SAC suddenly sent me off on a reverie of remembrance of that time around that mid-teens with the hedge fundery kind of movement. So you were
That's
part
right.
of that with them.
Oh, absolutely.
That's absolutely amazing. So I suppose, the way of encapsulating your contribution has always been that you're connecting the capital markets into those insurance opportunities. And I suppose Transverse is the absolute, almost the embodiment of that. How do you channel in the most efficient way the best risk to meet the decent quality capital?
Well, look, Mark, you literally just answered the question of why Transverse. How do we come up with the name? We're bridging worlds. We're bridging certainly the capital markets worlds into the insurance world, but we're also bridging the best MGAs, best programs, hopefully one day globally, with the highest quality set of participants, risk participants, co-investment participants, as we think of it on the reinsurance side. There's a lot of what we do that is nuanced and special in my view, but ultimately it's all about being a facilitator between this burgeoning world of MGA business and this desire to participate from both rated carriers and very high quality alternative capital as well.
It's interesting. I've lived through that same period when MGAs, I mean, if you talk to someone like David Howden, who started Dual in the late 90s, and I do remember I was a broker in the 90s, and of course, he always says, oh, well, when we started Dual, MGAs were a kind of a dirty word in the London market. And it was kind of easy to see why, because actually often it was just adding a 10% or 12% overrider of cost onto things. And of course, now technology has changed so much more. And of course, it's all about distribution. And at the time when you were starting, there were fronting carriers, but we didn't really have this idea of a hybrid carrier.
Correct.
And we had very little competition around that time.
That's true too.
Yeah.
There absolutely were fronting carriers. And as we were thinking about being that ideal partner to the MGA space, we realized that providing high quality and stable capacity, flexible capacity, dynamic capacity, but of high quality and ultimate stable levels of premium so that the MGA can grow their business, that led us to look at the fronting model versus a traditional model where you can go to a highly regarded primary carrier full stack today, but you're going to get a risk allocation that is subject to many limitations and considerations that might have nothing to do with your business. And if for whatever reason that carrier changes their appetite, you're going to have your entire business at risk as you look for a new partner. And it's not a light switch that you turn off and you turn on. There's a lot involved in both the onboarding and the running off of programs. There's real friction there. So it's very much a marriage when you're partnering with a carrier.
Yeah, it's not something you can enter into lightly, is it, at all? Because it's
not
the
at
whole
all.
portfolio and whole portfolio out. You can't just kind of put it in and out. It's not like the hokey cokey, you know.
That's true. And also a lot of the traditional carriers will ask you to use their systems. They might be great, they might not be great, but a lot of MGAs, as you said, Mark, are very tech forward or are doing absolute state of the art in every aspect of their business. And they would lose that if they had to use the legacy systems of a large carrier. And so structurally, we set up a systems agnostic way of ingesting the information from the MGAs, but allowing them to pick and choose the systems that manifest best for whatever line of business, whatever area they're focusing on within the P&C space. But then to your earlier question, hybrid fronting, that came about because we studied the failures of fronting from the 90s. Fronting carriers have been around for a while. MGAs have been around for a while. Both have been on a evolution of quality and legitimacy and sophistication and acceptance, of course. In the 90s, there were a couple high-profile failures in the fronting space. And while there are certainly specifics to them, you can basically summarize it as in a traditional front, theoretically, you don't have to care about the underwriting performance because all of that is being passed through to the reinsurers, theoretically.
Yeah.
In actuality, that is the biggest mistake you can ever make.
Well, you've got to worry about your credit. You're taking on a whole lot of credit risk. And if you don't
you got
recover
it.
your insurance, you're in deep, trouble.
100%. The failures are all on the either ability or willingness to pay of the reinsurers that stand behind you. And so if you give them continuous bad results, surprise, surprise, both the ability and the willingness to pay decreases. And all of a sudden, the model will break. So from day one, we wanted to make sure that alignment was everything. Gross underwriting performance is everything here. So how do we do that? One of the obvious ways was to participate with our balance sheet in what we're doing. So we are still a facilitator opening up all of the global reinsurance market to the best MGAs, but we're also there right alongside. From my old life, I think of it very much as pari passu co-investing with other high quality, sophisticated, partner-oriented reinsurers, and we are there with them participating in the results. With the one difference versus the other participants is we're not just signing up to a treaty on an annual basis, we're actively engaging with that MGA no less than monthly, and we have whole teams set up to interface both on the qualitative and underwriting side and on the quantitative bordereau side of things to make sure that we're always helping the MGA navigate the vagaries of their market, and to the extent we have to, intervening before things become a bigger issue down the line.
You're offering stability to those MGAs, which of course, in the old days, it was a precarious annual renewal. And it's crazy being an agent when you suddenly realize that you've got no one to be an agent for. And it may well also be no fault of your own, just the market's changed. Suddenly there's appetites. People are not interested in this esoteric line of business. And maybe you've been producing a gross well below 100 for years and years and years. And then suddenly just sort of fashions change and everyone's forgotten about you, or they're saying, we just don't do that anymore.
Exactly.
But in that, obviously, what is really behoving on you is to keep that gross for everybody, for that ultimate reinsurer right out of the back, paying obviously more commissions than everybody else right at the end, that their net is still profitable and keeping it profitable for everybody. So again, you're providing stability on one side. How do you get in a world where there's more competition for those really solid, the most skillful, the most knowledgeable MGAs, which will produce the most stable results and steady, profitable results? It's a more competitive world than it was before. So what's the USP you're offering them as you're out there? Obviously, the real job is to find these great underwriters who've got MGAs and back them and stick with them, because they'll be solid and stable. And then you're providing them with their solidity and stability. And of course, you'll provide that for ultimately anybody who is reinsuring you. But how do you find those people in a more competitive environment? How do you keep them?
Oh, that's a great question. I mean, it's kind of everything to our business.
It's the fundamental thing, isn't it? This is what you've got to do, and you've got to keep doing it.
Yeah, there are both the harder answers to that and the softer answers to that. On the hard side of that, for sure, the salient key thing would be the reach out we did directly to Mitsui Sumitomo in 2022 that resulted in our acquisition. We are the only front or hybrid fund owned by one of the 10 largest P&C carriers in the world. We are A+ rated, class 15 balance sheet. There are 40,000 people around the world working for Mitsui Sumitomo in 46 country offices. The capabilities, the legitimacy of our financial strength, the hundreds of years of history, the brand recognition, there's a lot there. So our financial strength, our rating, our brand, when an MGA is out in the market, they still have to disclose, of course, whose paper will this be on? And when the answer is Mitsui Sumitomo, it's a very, very compelling proposition. So we're looking to focus on the MGA partners and reinsurance partners that appreciate that. So rather than getting into a knife fight over an MGA that doesn't value that part of the insurance value chain, notwithstanding the fact that it's, in my view, one of the most important or the most important, I still wear the ultimate responsibility for every insured's experience, right? So in America, insurance is state by state, line by line. And while everyone should be aligned, from a state regulator's view, the carrier is responsible for what happens. This is everything to us, right? So we are absolutely focused.
If you're holding a pen, there's a big difference between a Mont Blanc pen and a big biro, isn't there? But, they're still pens. I mean, still work.
I'm going to take that. Exactly. You got it. Look, on the key differentiators, absolutely. Our rating, being part of Mitsui Sumitomo, our capabilities, our geographic capabilities, all of that is there on the one side. But on the softer side, fronting, hybrid fronting, MGAs, it's still relatively new in this era for how it's being done today. MGAs have been around for a long time. Yes, fronting carriers have been around for a long time. But the 2025 version of an MGA, of a program, of a carrier, of a reinsurer, it's pretty new. And when I say that, what I mean is any new entrant, any recent entrant to the space, they're all still learning. They're all still learning on how to do this effectively. And we've been iterating for 8 years now on every aspect of our business. And I don't just mean on the underwriting and underwriting oversight. I just mean on the reinsurance and reinsurance structuring side. We have a 15-person reinsurance team here. Theoretically, in a fronting carrier in Excel, you don't need any. But we've learned over time that there's a ton of value that we add to our MGA partners by being a very active steward of the whole capacity construction framework. We're not disintermediating brokers at all. We work with them very closely, and we're very pleased to be a significant contributor to their top and bottom lines. But we in-house as well are our own advocate to make sure that the capacity is going to work, not just as a trade, as a one-off, but that over the long term, because again, sustainable capacity is so critical to our MGA partners. And on the underwriting side as well, every one of our 30 people in underwriting today know that it's not just as a police officer to make sure that the MGA is staying within its underwriting guidelines, but they're also there to work with their counterparts to think about how can we be a true partner? How can we help you grow your business, innovate, expand through geographies, through premium, through rate and form and filing? We're here as a partner with you. We're aligned together. We're going to win or lose together. So let's be a true partner. We've been very pleased that some of the largest MGA groups in the world appreciate that and view us as a strategic partner. That's why even though we have 57 programs today, it's only with 20 MGA companies. And we really try to keep that small so we can give the time and attention that a client needs so that we can really work together for the future.
How do you fit in with Mitsui Sumitomo Insurance Group strategically? What are they looking for you to be doing for them? Obviously, you've been growing, which is great, and growing profitably, which I'm sure is great. So what are they looking for in this relationship from you?
This is a great question. We think we bring a number of attributes to the overall organization. They've been a great parent, very supportive of our business. It's through their support that we've been upgraded to an A+ class 15. So they are absolutely committed to our business, and we appreciate that.
I suppose you knew each other before. They were paper on with you before. Is that obviously you got to know each other through that relationship?
We got to know them through industry relationships. I wouldn't say they were a massive reinsurer of Transverse, but we certainly knew them from the industry. I think that it's public, of course, that Mitsui Sumitomo has been very focused on North America. What we told Mitsui Sumitomo as sort of the reason that they should buy us originally was the ability to enter the US at scale from day one. We were already over $1 billion in premium, but also acquire one of the leaders or the leader in the fastest growing, most dynamic part of the US and maybe globally, the insurance sector. It's been such a massive shift, massive movement. And we think that movement will over time propagate into other parts of the globe as well. So there's that. The other thing is, this is also quite public, that things are changing in Japan and how the insurance market works in Japan. And there are really no MGAs in Japan today. But as Mitsui Sumitomo thinks about their own business domestically, as they look for ideas, as they look for innovation, as they look for places to invest, one of our ongoing conversations, something that I have with the senior staff in Japan, is all around showing them what current state-of-the-art best practices look like. And we think that that's really in the MGA space in the US. If you want to see whether it's technology, whether it's product innovation, whether it's talent, or it's structural innovation, all of that you can see most actively in the US MGA space. So giving that access to the home office, we think is a huge value added as well on the softer side.
Obviously, now you're part of that global group. There's quite a lot of questions relating to that. With the A+ balance sheet, does that make you want to retain more? Obviously, you have the financial ability to retain a lot more. Is that not really the model, I presume, because you can't retain all of it, because how can you share it then with your insurer partners, of course, if you retain everything? Then that would be very different and defeat the object, one presumes. But anyway, run us through, how does that affect your risk appetite on the retention side?
Retention is always a discussion in the space, and we can spend a lot of time on that if you want, for sure. I'd say MS Transverse is focused on connecting the highest quality programs with the highest quality panel of reinsurers. We are ultimately a facilitator. And so MS Transverse itself is gross performance oriented. We're focused on that gross loss ratio, gross combined ratio. And then we want to build the highest quality, most sustainable capacity solution for our MGA and program partner. There are a number of groups within the Mitsui organization whose job in life is to participate as an underwriter, as a balance sheet in business. And we think that's a huge value add as well for us, that we can bring our own balance sheet and other balance sheets within the organization to bear. But we are not an in-house programs group like maybe some other carriers might be. Our entire model is around working with reinsurers. We're so pleased to be the only fronting carrier or hybrid fronting carrier to partner with a number of the largest A+ rated reinsurers in the world. They also have great relationships with Mitsui Sumitomo, which is great too. So we have that to work on as well. And we're very, very proud of the fact that we consider them as much a partner in some ways as the MGA. An MGA program only works in a fronted context when you have a conforming reinsurance panel that works. So we've learned, and we have absolute buy-in from the home office in Tokyo, that we are always going to be a facilitator, making at least the most sophisticated and highest quality reinsurers will always have access to these programs as well. It's actually synergistic for everybody.
Yep. So basically just giving you better quality tools than perhaps some of your peers, but they're not trying to change the nature of what they're doing. You're not there to fill up their premium allocations, for example.
Correct. Everyone's asking, like, are you at 10%? Are you at 20%? Are you some other percent? Every answer in insurance, of course, is it depends. It's the first lesson anybody learns when they come to this industry. So yes, it depends. But also what I'd say is we don't really think about it in those terms. We think about the quality of the overall reinsurance panel. We call it kind of like a Mondrian painting, right, of quota shares and excess and whatnot, and trying to optimize that panel, the name and quality of the participants involved, the likelihood of them sticking around long term, the net economics, the subjectivities, all of those aspects come into it. And then we look at our retention as part of that, because how does a retention of some, a lot, a little affect that overall Mondrian painting? And we're just trying to get to the best Mondrian painting.
Those wonderful spreadsheets that we've all struggled with over the years, I always think of it as a patchwork quilt rather than a Mondrian painting, but maybe that's more kind of London market in me, because the problem with a patchwork quilt is there's always a little hole somewhere. There's always some odd shaped thing. You think, who's going to fill in that bit? The bit that's, in excess of 50, but whatever, What about the market itself? Obviously, you've already spoken about that explosive growth, and your timing was absolutely impeccable. You've ridden an amazing wave of change in the way that businesses subscribe to and the way that business flows around the market, and you're right at the coalface of that. You can see where all these flows are going. We got continuing growth baked in. Certainly the news coming back from the WSIA conference was that plenty of businesses growing, particularly in the flows into the excess and surplus lines, for example, still going. Do you agree with that assessment that things are still pretty rosy in terms of the growth that's still there?
So I'd break that into a couple different points. I think let's do E&S first. E&S, of course, has had very significant growth. I think we agree with a number of other market participants that the traditional cycle of ebbs and flows from E&S to admitted might be more muted this time, as in that E&S size and scale might stick around much more significantly than it has in the past. Much like MGAs and fronting and other things, the adverse selection or stigma in the market about E&S vis-a-vis admitted business seems to have dissipated. And a lot of the different actors in the insurance value chain have come to appreciate the freedom of rate and form that you get within the E&S market. And there's a lot of risks in the market today where E&S is just a better solution than what's currently available, at least in the admitted markets. That's not to say that there isn't a ton of opportunity, of course, on the admitted side also. And MGAs are kind of overall half and half admitted in E&S. But it is amazing to think, E&S is what, 130, 140 billion.
Yeah.
And MGAs are about 110, 115, according to Conning. So the MGA market and the E&S market, again, not the same thing, but are both approaching separately and apart 10% plus of the US P&C market. That's pretty amazing. So E&S, we think, sticks around.
Yeah. And in terms of the MGA formation, it being a sort of preferred career path for talented underwriters, do you think that's still going to continue?
Absolutely. That's something where the model is just so compelling versus working inside of a traditional carrier for a certain set of individuals or teams, not for everybody. I'm not calling for, in any way, the death knell of traditional carriers at all.
Some people are just not cut out to be an entrepreneur and to kind of live off their wits in the same way that other people are.
That's part of it, certainly. I'd also say that for certain lines and for certain approaches, a traditional carrier is absolutely the right home. Not everything should be an MGA. Not every line should be an MGA. And the world is still learning where MGAs thrive, where they perform best. And so I think that we certainly have our views there. We don't have to get too deep into it, but what we're looking for is where that MGA is justifying its existence. Why are you an MGA? Why aren't you just a division of a carrier? What are you bringing to the table? Specialty and specialization, of course, are part of that. Edge is part of that. It could be a distribution edge. It could be an underwriting edge. It could be a technological edge. We're looking for MGAs and programs that justify their existence, that have long-term sustained track records of outperformance. I think our overall goal is if we can represent to the reinsurance community that access point for top decile performance across lines. So rather than making a call on commercial auto versus D&O versus cat exposed property, we want to work, and we know that there's enough demand on the reinsurance side for outperformance in all of those lines of business. There is dispersion within a line of business across MGAs. They are not all the same by any stretch of the imagination. And so the more that we can build acceptance on our origination process, diligence process, oversight process, et cetera, that's kind of the vision long term.
Yeah, I mean, you want to find the ones that are always adding more value than whatever their overrider was, and that are always calling you about the profit commission, and you're very happy to be paying them out. And everybody's happy. You only pay profit commission if there's profit, so that can't be a bad thing.
No, look, we put out a white paper called the three-legged stool. All three legs need to stand for the stool to stay upright, right? So the MGA, the carrier, and the reinsurance all has to win or lose together.
It will fall over eventually. Yes, you can kind of balance on it for a while, but you will fall over.
You got it.
Obviously, Mitsui Sumitomo is a global group, and you're primarily US focused. Would it be logical? You already mentioned about Japan sort of being very ripe for development in the MGA space. Obviously, we know other countries. I'm from the UK, of course, very developed in MGAs. Would we be expecting to see MS Transverse's operations springing up all over the world? Obviously, you effectively have the world as your oyster now, where the Mitsui Sumitomo Group has got a license in virtually any territory you would like to operate.
Yeah. I think it's a logical progression for the business. What I can say, we are a public company. What I'd say is there is a complete understanding by the senior leadership in Japan, and certainly by us, that we need to be there for our partners. Our partners are expanding globally, and we need to make sure there's a solution for them within Mitsui Sumitomo. So we want to make sure that there is a smooth and seamless expansion as MGAs are propagating globally, as our large aggregator clients are acquiring things in the UK, in continental Europe, in Australia. We want to make sure that we're maintaining and growing our relationships with our MGA clients, which is a natural thing for a company that already is in pretty much every country that exists.
So it sounds like a more organic thing that you'll go where your MGA customers are already pulling you. They're putting you to, hey, Australia, UK, or wherever, or continental Europe is probably the first places one would assume to expect to see you then operating, continuing to service those now becoming multinational MGA groups.
I think that's very fair. The MGA phenomenon is taking hold around the world. So 5 years from now, 10 years from now, we don't think there's a market where there won't be some amount of MGA presence. It's certainly the most developed in the UK, as you mentioned, and growing in continental Europe. Australia is quite large too.
Yeah.
And so we're very interested in what's going on, and we're so proud of what we've built in the US, and we'd love to bring that to the rest of the world.
The rate of growth presumably is not quite what it was, given we've been through such a boom, and it's probably perfectly understandable that the rate of growth is likely to slow over time. You're the capital markets guy. Would that naturally bring a wave of consolidation? Because we've seen such a proliferation of hybrid carriers, and not all of them are going to get to the sort of scale that you've got, and not all of them have the kind of backer that you've got that also has been long associated with inorganic growth. Do you think we're likely to see a wave of consolidation at some point when market conditions start to dictate, when, particularly if growth starts to just mature and become less exciting as it has been?
Well, as you said, Mark, I am a recovering money guy. They like to tease me here, so that's fair. Look, there are a lot of hybrid fronting carriers, especially in the United States. And you're right, a lot of people have called out the fact that if this was a lot of brokers or MGAs or other aspects, you'd see a ton of consolidation. We haven't seen that consolidation yet. I think there's been one thing announced, if any, and I don't even know if that's closed, but at least one was announced. This is just my opinion, but I think it's much more likely that a traditional carrier, strategic player, acquires one of these existing hybrid fronts to build a MGA competency inside of their business than it is for two or three of them to get together, or even for Transverse for that matter. I'm not saying we'd never do it, but the incremental value add really isn't there, in my view, again, just my view, than the value a traditional carrier would get for bringing in that expertise and relationship and capability in-house. So I think it's more likely that other carriers, traditional carriers, acquire some of these groups than they merge with one another.
Again, that's something we've seen that obviously the reinsurance market is softening somewhat. And again, that's often something that tends to happen as carrier markets soften. They tend to be more likely to buy into distribution, particularly in the form of buying an MGA, particularly an MGA that they've been backing for a long time. That seems very, very plausible. But you'd say that's more likely than intra-hybrid carrier M&A.
Yeah, look, I'm not saying it can't happen, of course. I think that the value prop is greater to open up the MGA market to a player that isn't there today than it is to merge to smaller scale groups and try to grow into a good outcome for both of the existing owners. It's kind of difficult.
What often happens when the reinsurance market slightly softens, it's not soft, it's more softening from a very hard place. It tends to bring expenses more into focus. How do you respond if a reinsurer is saying, hey guys, look, we're kind of coming under a bit of pressure here on seeing commissions and other things? What's the best way to respond with that? Is it just to show them the numbers and say, well, these numbers speak for themselves? This is still a very equitable relationship and the expenses are under control?
So a couple of things I'd say. Number one, as you said, the market's not soft. It is less hard than it was, but that's different than a soft market. A couple of things to know about our model. One, it's completely transparent. So all of the different bites at the 100 cents of premium, where they're going, it's visible to all. So there's not a hidden set of allocations and charges the way there would be in a different model. So everything's fully transparent and everything has to justify its existence every year. So for us, our focus is that the programs are outperforming within their line and delivering a quality return. And as long as that's the case, we really haven't had a lot of pushback from the reinsurers because the performance has justified the sort of sessions and whatnot that it currently has. And we look to kind of maintain that going forward. Currently, that's the case. We'll sort of see how things go over time. But as long as we can maintain the gross performance, we're seeing no real reduction in demand from the various carrier partners. Certainly, there are shifts in appetite. There are always shifts in appetite. But again, there's 150 different reinsurance entities behind us today. So when one group is less constructive on a certain line, there are other groups that are very interested in entering. And in our model, we can move those parts of the painting around without any disruption to the primary business or to the MGA itself. Normally, if an MGA changes carriers, they might have to send termination notices to all of their clients, along with another notice like, don't worry, there's this new one. But you can imagine the amount of shopping behavior that engenders, right? So the fact that we can navigate appetite changes without disrupting the core business is one of the best selling points of our model.
I'm going to ask you about technology now. Obviously, you mentioned at the beginning about being sort of tech agnostic for those MGAs so they could pick the right tech for their particular line, because often these are quite niche lines of business. Digitization is coming to our market, and obviously that would certainly aid a participant like you who wants to be as transparent as possible. It certainly aids transparency and also would aid transparency to those reinsurers if they can get a kind of look through as to right through you to see exactly what those MGAs are writing, almost right down to the last geocode of what they've just put on the books in the last 10 minutes, that kind of thing. What kind of benefits have you had from having that legacy, that totally blank sheet of paper you mentioned at the beginning? And what about things like AI? Are you looking to that to make further savings? Certainly, most people I talk to are using AI for efficiency, productivity, and removing sort of dull, repetitive, re-entry type tasks, that kind of thing.
Look, it's a great and very timely question. There's some really powerful aspects to our model. So to give you a sense, there's about 110 people working at Transverse today, but there's close to 9,000 people doing the actual rate quote bind at the MGAs that we've delegated our authority to. And in addition to just the manpower that the sort of force multiplier of this model provides, and by the way, that doesn't include TPAs, doesn't include the reinsurance staff, et cetera. There's a lot of people touching the 500,000 policies we've written so far. As a company, we're not just 110 people, but there are 110 people with an MS Transverse business card,
Yeah.
kind of overseeing and conducting and making sure that everything's being prosecuted in the right way. In addition to the manpower, we're also benefiting from all of the infrastructure spend, including technology spend of these leading players. So the $50 million that one of our partners spent last year on IT, including heavy investment in machine learning and AI, we get to benefit from here at Transverse. So we really are, it's not a sales pitch at all. We are benefiting from all of the investment and focus of the MGA sector. A lot of people probably know, but something like 60-70% of all insurtech launches are also MGAs because the model is so powerful for them as well. We don't do a ton of insurtech here, but we have a few, and we're quite impressed with what they're doing. So what I'd say is we certainly are benefiting from all of the innovation, tech spend, AI involvement of all of these different MGAs. It certainly depends by line and by geography, but they're there, and it's certainly an area of focus. But at the same time, at our level, at the MS Transverse level, we have a saying that we're not doing science experiments here. So we're not willing to jeopardize any aspect of our kind of sacred duty to make sure that the ultimate insurance is handled correctly, right? We are wearing the entire regulatory obligation of what the MGA is doing and what the reinsurance is participating in. That's on us. And so we have to make sure that when we're using technology, it's being done absolutely to the specification of the regulators, to the rating agencies, to our Japanese oversight as well. All aspects have to be copacetic with whatever we're going to do on the technology side. With that being said, we've actually found some really great technology providers, software platforms, and we've been working very closely with them to optimize our aspects of the insurance value chain in a way that there was no existing or legacy system to do so. So very, very pleased. We have a whole team here under Bob Mozica, very focused, who used to be, COO of Munich Re America. I think he set up Plug and Play for Munich Re back in the day. So we've got a real innovation-minded guy leading that effort too. But what we've been able to do with systems here to start to take the manual work off of people and so they can spend more of their cycles on the strategic side, that's been huge. So we are seeing benefits there. There's some AI there, but I think as the primary carrier, we have to be very thoughtful about the use of AI in particular. I think all carriers in America have to report now, primary carriers at least, on how they're using AI to the regulator. We certainly have to, and we have the requisite oversight committees and working groups and whatnot around it. It's a fact of life. It's something we talk about, but we also are not, what I would say, looking to do a lot of science experiments around it either. When things are proven and when things justify their existence, we're ready to adopt it right away. And of course, Mitsui Sumitomo itself has a lot of focus and investment on the space.
So it sounds like because you're ingesting so much and obviously pushing that through to so many different people, it's more about having an operational platform that makes sense for you, because it sounds like building that exchange, that platform that you're operating on, that you're able to see the performance of those different MGAs, or perhaps some of them using different systems. And obviously you didn't want to straitjacket them and saying you have to use this system or that system. Do you want to mandate them? But again, you've got to look through and analyze those books on behalf of the capital that's backing you, and obviously your own capital. So again, it sounds like it's more of an operational focus. Is that the right way of describing it?
100%.
Again, could use technology to try and add value to those MGAs. Do you want to be able to give them insights to tell them how to do their job better? They might not necessarily like you doing that, but if you gave us some really good ideas to shave a couple of points off the loss ratio here and there, they might say, hey, that sounds like a good idea. We'll give it a try.
Look, you actually touched on something. Just going back to the beginning of our conversation, the ultimate mission of Transverse Insurance Group, now MS Transverse, has not changed. We want to be the ideal partner to the best MGAs and programs. So we do spend a lot of time. I spend a lot of time thinking about what else, as a servant to our clients, what else could we offer that would add value? So there are things within the tech world, the insurtech world, that we are looking at and thinking about, would this be interesting? Would this be relevant? Would this actually add value? And where it will, you'll see us start to add that tool to our toolkit moving forward. Again, we're not super focused on what others especially in hybrid fronting, are doing, we want to make sure that we continue to grab that market share for the most sophisticated players in the global MGA space. And that means you have to not just be highly rated, not just be well-resourced, but you have to bring new things to the table. And so we spent a lot of time on that.
Got to bring your own edge, I think, there.
Yeah, exactly.
Dave, I've come to the end of my list of questions. I think we could talk for longer, but I suppose we're running out of time. So I think it only remains for me to thank you so much for really engaging. Your first answer was the most comprehensive description. I think you sort of crossed out about 4 or 5 of my questions all in one go. And so at the beginning, I would normally have interrupted you or asked to clarify, but there was no need to. It was absolutely fantastic. So good luck with everything. Thanks so much for your time, and good luck with the continuing journey. It seems particularly exciting. Thanks so much for coming on the show.
Thank you, Mark.
Well, I hope you enjoyed today's episode. If you did, don't forget to subscribe or leave a like or a review or recommendation on whatever podcast platform you used to access this program. These really help get the word out. Before we go, just a quick reminder that advertising slots are available here and in other places in the Voice of Insurance podcasts. Podcasting is the fastest growing medium and attracts a high quality audience of key decision makers. It's also an intimate medium where you, the listener, are right in the room with me and the interview subjects. Needless to say, that means it's a great way of getting your message out directly to an audience because you know you've got their full attention. It's also very cost effective. So get in touch with Mark at thevoiceofinsurance.com to find out how you could be speaking directly to the industry.
The Voice of Insurance is produced in association with Advantage Go. Release your underwriters to underwrite with Advantage Go's underwriting platform. Voice of Insurance is produced by me, Mark Gagan. Music was written by Anna Gagan and produced by Carlos Gagan. Check out more podcasts and written comment pieces at www.thevoiceofinsurance.com.